Well, I think we had a combination of it. We'd had a very good run going into some difficult Fed statements over the last couple of days. And obviously, Russia heightens volatility going into a long weekend. You have some inflation trends that I don't think are getting a lot better. In fact, I kind of feel like labor prices are going to follow prices and that this is going to be a slightly longer and more difficult period. So you add that up, and we close on the lows on Friday with the technical position of the S&P and the triple Qs or the NASDAQ 100. Not great. And, you know, I don't want to rain on what's already been a dismal afternoon. But I think there are other parts of the market that are working. And you know, volatility was too low probably coming into today.
Yeah, and we saw that spike 15% in the session today. You know, James Bullard is going to be on the network on Monday morning. Tim, is there anything that he could say that could jar it much beyond the jarring it's already seen?
We always have to listen to the Fed's interpretation of the labor market. And again, you know, so far they've given you some sense that they think it's part of the reason why I think they went on the front foot on the hawkish rhetoric. I get the sense they're seeing a labor market that may be tighter and hotter than they expected. And I think that's what worries me in terms of the part of the inflation curve that doesn't really concern me, I think, is related to supply chain dynamics and even food prices, I think, can ease up. But it's the services inflation that's tough. We need to listen for that. I think there's a sense in the markets that the Fed could, you know, we might be pricing in a little too much Fed now, even though, again, I think that they're a little behind the curve. But we're probably not pricing in enough long-term Fed. And I think people probably don't realize how long this could go on.
Well, he also doesn't speak for the Fed. He speaks for himself, and it's a voter, and so obviously important and market moving. But, Tim, as to your overall theme of inflation, I just wonder how much the Russia story feeds that top energy exporter to Europe. Also, looking at some of these numbers, it provides 40% of the world's palladium, 30% of the world's titanium. I wonder what that does to the overall commodity picture and this big Fed fight that it has on its hands.
Yeah, Norilsk Nickel's the biggest nickel company in the world. You've got potash producers. You've got, you know, they really have been a marginal producer in the past and a spare capacity producer. And I do think it's something that, look, if you look at the markets that are working right now, Russia had a tough day, but off the bottom, Russia was about 21% off the lows, and Brazil is on fire. And again, you talk about central banks that are well ahead of the curve in terms of actually having Brazil's hiked 7 times since January of last year, up about 725 basis points. So in some sense, they've had that fiscal and monetary adjustment. And some of these places actually look really interesting here. But no, I don't expect a lot of relief on oil. And in fact, I think the energy trade that was largely been a trade for most investors should be the energy investment for most investors. I think we're going to have oil prices longer, higher. And I think it's one of the reasons why you're even seeing the oil services space outperform.